Good afternoon. This is Bakes, Kevin Baker with Bakes Takes. Welcome to my podcast. Happy New Year to you. Can't wait to get 2020 in the rearview mirror. Very excited to be back, and let's get right into it. Number one, Bitcoin. I'm no schoolboy, but I know what I like. Mike, I got a lot of Stones references going on today. It's going to be fun. Number two, uranium. Start me up, and it has. And number three, cannabis. It's all over now. She used to love me. Anyway, I'll give you all the details of that right now. First, my themes groups. Happy New Year again. I really want, please, I'm going to say this at the front, please send your questions and feedback. I plan to be more consistent this year, build the website, launch a newsletter, both free and paid, with a lot of extra benefits for members. Add guests. Please think of candidates that you, maybe from other podcasts that you've encountered that you'd like me to reach out to and interview. I'm going to post more on social media. I'm going to lose 15 pounds, maybe. Here's all my list. Anyway, I need to monetize this too, so I appreciate your help in advance. All your thoughts, support, ideas, I welcome with open arms. Thank you for a great 2020. Let's build and add value to our community in 2021. Briefly, why I do this. Bobby and Jack, my sons, they've been on the podcast. They do a great job. And everything I do is as if I'm speaking to them and I'm inviting you to listen in. There are plenty of millionaires in their 50s. They receive plenty of money and markets advice. I don't see 56-year-olds coaching 20-year-olds. So that's what I do. I've enjoyed successes. I've suffered failures. I've learned, and now I can teach. I've been in 2 mutual funds, 2 hedge funds, 2 institutional firms, and I have the scars to prove it. Started off with being a broker in the 1987 crash. I'll give you my journey very quickly. A broker at Kidder Peabody, may that firm rest in peace, in the bowels of UBS now. Went through the 1987 stock market crash, down 22% in a day. Realized I didn't know what I was doing. Wall Street analysts didn't know what they were doing. And so I went back to find out what I could do to improve. And I discovered technical analysis. And reading the charts, the points, the volume, and the highs and lows and price points on the stock chart. And I go technical analysis first, fundamentals second. Other might disagree with it. They might reverse the order. It's not right or wrong. It's just what works for me. And that's my whole focus, what works. I read the Wall Street Journal, Barron's, The Economist. I listen to podcasts. I devour relevant newsletters. I monitor what my Google alerts are bringing me. And I point you to them, and you're welcome to read those. But if you don't want to do that, please know that I'll do it for you, and I eat home cooking. I just talk about things that I invest in. I have no conflicts. And speaking of what works, shameless plug, I've also become the CEO and Chief Investment Officer of Tower Financial Technologies, that I've partnered with Dr. Lev Markov, a brilliant PhD in applied mathematics. He used to cheat off my sheet in Leningrad. Anyway, brilliant math mind. We run a quantitative system that we're broadening our approach out to, and welcome your inquiries in there. It flat out works. Made money every month this year, even in March, September, October, that were down pretty significantly. And so I've got a lot. My focus on what works has led me to that direction as well. But this is also working. So let's go over the second half of the year. Here's where we are, and here's how we did with our methodology. Small account that I started at the beginning of the year. Beginning of July, and because I wanted to show the ins and outs of screening investments, finding them, investing in them, selling them, all the above. So GBTC, the Grayscale Bitcoin Trust, I'm obviously talking about my best ones first, but it's up 110% in the back half. I sold half after it doubled in a month. That's part of my discipline. So now I'm just letting the profits continue to grow. North Shore Uranium, URNM, up 40%. It's I'm so bullish on uranium. Tim Rotolo is the CEO of North Shore Uranium.
great ETF, good guy, spoke to him live. Turns out he's a Tufts grad like I am, go you jumbos. And a great way to participate in uranium. I'm getting more enthusiastic by the day. Cannabis, YOLO, YOLO, that's the symbol of the ETF, up 24%. Overall, the account's up 13.7% in the second half. Not bad. 60% invested, still have 40% in cash that I'm looking to deploy in other things. And so that's what I've been doing, and I'm pretty happy with the first 6 months that we've been doing this. This brings up another point. The difference between institutions and you. Institutions need to be fully invested. They hug indices to some extent, even if they say they don't. So they have to own some financials or energy or biotech that you may or may not care about. We can discover themes and exploit them. And our focus, and my focus certainly, is making money every year, compounding positive returns every single year, and avoid disastrous losses. And I'm not always going to do it, but that's what I'm striving for, and so far, so good. This year, I'm going to be more detailed and specific. I've had a lot of feedback, so that if you have a Robinhood and Fidelity account, I will, give you the symbol and the name, which I recommend highly, so there aren't errors, and what I buy and sell. And, of course, I'm going to give you my non-lawyerly disclaimer here. This isn't investment advice. Please conduct and share your own due diligence. And I think that would be great for everybody to find things that not only that I'm finding, but what you're discovering as you conduct your own due diligence. So this is from Future Loop. And there's $20 billion in crypto under custody. Coinbase is seeing an explosion of capital from institutional investors. The $20 billion is up from $14 billion in April. So it's up almost 50% in 8 months. So there's a string of bullish events that have really increased institutional adoption, which brings me to the Wall Street Journal. Paul Vigna and Anna Hertenstein wrote a great article a little while ago talking about Greg Giamatti, the Boomer and Geo morning talk show in New York, mostly about sports, but the screen lit up when they started talking about investing $10,000 in Bitcoin. So it's clearly touched a nerve. To those who don't know Bitcoin is a form of money that exists digitally, started in January 2009 during the depths of the financial crisis, and its main benefit is it can't be debased, excessively printed by central banks. So it gets a lot more complicated than that, but it also is about as simple as that. So you can see on the screen the quarterly inflows of the Grayscale mutual fund, ETF complex, exchange traded fund, and an exchange traded fund. Just to go back a little bit, all it is a mutual fund that trades 9:30 to 4 o'clock during the trading day. It's a collection of stocks, a portfolio of stocks encapsulated in one stock and one stock symbol. In this case, GBTC. The part of the appeal of the bullish case for Bitcoin is simply the reallocation away from gold that is happening. It just is. There's over $200 billion in the gold ETFs that are out there, and the Grayscale complex is 10, 20, something like that. So just a tiny amount of money shifting into Bitcoin is going to be a big deal, as you can see in this chart. Here's GBTC, the chart. Look at this high volume breakout above 15 that occurred not that long ago, and it suggested a sea change to me. And then the news came. PayPal was accepting Bitcoin. Paul Tudor Jones was espousing it. Druckenmiller, Soros' former partner, great hedge fund mind, turned around. He was a skeptic, and now he's an owner of Bitcoin. But here's why I like charts so much. It anticipated the fundamental news events that came later. Didn't know exactly what they were going to be, but they're sure showing up in spades, and they continue to. Here's the monthly chart, which looks even better to me. Look at the new highs on volume, accelerating to the upside, taking out the 2017 highs. This is a real trend that is occurring, and I would not bet the farm on this. This is for a small percentage of your portfolio, but I can read a chart, and this chart is going north. It won't go in a straight line, and it won't go up forever, but that's a bullish breakout. I don't care how you slice it. There's no question about it. CNBC obviously follows where the money goes and has brought Bitcoin experts on. This one trader, Todd Gordon from Trading Analysis, for example, I'm not saying that this is going to happen, but he puts together a very plausible case for a price of $74,000 for Bitcoin. That's a triple from here. He uses Elliott wave analysis. He uses Fibonacci sequences and ratios. I won't go into all of that. I've read all of Elliott Wave's books, but it gets really in the weeds. But these are not crazy kinds of numbers when you look at this from a technical standpoint and from a fundamental size of market standpoint. It's plausible to me. Bitcoin could potentially be the Tesla of 2021. This is Mark Tepper from Strategic Wealth Partners, and I think that's certainly possible. So I've got my about 10% of the portfolio there. Bit of a subtlety is that GBTC isn't owning a Bitcoin. It is a portfolio of Bitcoin, and you simply, by buying GBTC, own shares of the ETF. So there's a premium above net asset value in the ETF, and it happens from time to time. Just know that it's there. It was 19% when I bought it. I'm sure it's gone up. And just be aware that you're paying over NAV for the ETF in some circumstances. Double check it. Make sure it's not onerous. Make sure you're comfortable with it. Here's Anthony Pompliano, who I'm getting to like more and more with every passing day. Bitcoin is literally stealing market share from gold in real time, and you can see it on the chart that he retweeted. Pomp is all over crypto. I recommend the Pomp Letter and Podcast too. I just subscribed to his premium service. James Altucher is another fellow I follow. Has been on crypto for a long, long time in its short history. But to those who want to own Bitcoin directly, I don't own it directly, so I can't opine, but those are two very good sources. Go to the Pomp Podcast and the James Altucher Show. They also have accompanying newsletters, and they'll get you into brokers, custodians, fees, all those issues. But I think it's something that you should explore for a small portion of your money. AllianceBernstein, a pretty conservative firm, is talking about having Bitcoin as a role in investor portfolios. So this trend is in place and is going to be here for a long, long time, in my opinion. North Shore Global Uranium, URNM, Tim Rotolo's firm, talked about this originally in July. And so I put in the show notes here my 10 reasons why I bought uranium from the July 25th podcast. I'm going to go post it again just because I think it points to a couple of things. I've replayed in the past or relayed in the past my buy-sell discipline, which have 5 or 10 reasons why you're buying an investment or making a commitment to an investment. And then keep checking on those. And if 2 or 3 of those start to weaken and the pillars start to crack, then you start to considering selling. I've also have my technical sell discipline, which I follow religiously. But in the case of uranium, the bull case pillars keep piling up and strengthening. And so let's get into it. The URNM folks put out a piece a little while ago, and they're talking their book. We're all big boys and girls. We know that's what's happening, but numbers are numbers and facts are facts. So number one, and what I've done, you can go to the full article in the show notes, click the link, or here are my highlights. Increasing demand, the global nuclear fleet is growing, and I bet you that if you reached out to 100 people on the street, they would say nuclear reactors are in decline. That is not the case. 440 nuclear reactors going on right now. There's 54 under construction. expected to be operational by 2026. An additional 110 are on order or planned. Unlike the last decade where you had older plants that were being mothballed and the net result was a flat nuclear fleet, it's going to be grow by 135 reactors by 2040. So, and I think it feeds into the ESG theme. Although everybody wants to talk about solar and wind, nuclear energy works, folks, and it's very carbon efficient. Obviously, there's going to be more uranium needed to produce this energy. Shrinking supply. Uranium mining production is contracting just as demand is building up. There are now 62 companies, only 62 companies, mining for uranium right now. There were 420 before Fukushima back in 2011. So the mines are producing about 79% of the uranium required right now. Something has to give, and it's going to be price. Wildcard, U.S. Strategic Uranium Reserve. Nuclear plants produce about 20% of the electricity in the U.S., but very little comes from U.S. mines. If for national security reasons the U.S. uranium reserve becomes a reality, you'd further see the supply deficit pick up. Why prices may rise. U.S. and European utilities have largely run down their inventories, and they're going to have to see, the mining companies are going to have to see $50, $60 cost of production to being met. Uranium's in the low 30s right now. So we have a long way to go. And, you know, I like charts. Here's the monthly chart on North Shore Global Uranium, URNM. It's the prettiest chart out there. It's just absolutely gorgeous. And I don't care what this would be. I would be interested in finding the fundamentals of this story. And the fundamentals are terrific. And when the technicals match the fundamentals, it can be a lot of fun. And we're just getting started. Here's a long-term chart of the uranium spot price and the long-term uranium price under contract. And, this is not a small move. We've gone from over 100 down to the teens, and here we are in the low 30s. And so if we retrace, and I think we will, much of that decline that happened over the last 12 years, then we're going to make a lot of money in uranium. And I'd love to have you along for the ride. Mexico's cannabis legalization. I'm going to cannabis now. I didn't realize this. Mexico is likely has a vote soon. I think it was delayed once to become the third nation to do so and have the largest legal marijuana market in the world. So I think I said it's all over now in a good way. The impediments for cannabis are falling, and I don't think there's any way it's going back. And I'll tell you why, because here it is in the Boston Globe. Ed Fitzpatrick wrote about Rhode Island doing a 180 in a year because of their massive budget deficit. And so when revenues fall, like as coronavirus has caused in so many states, lawmakers look for money, and recreational marijuana is a place where they can find a lot of money. And I just think it is that simple. Here's the chart of the advisor shares, pure cannabis, ETF, YOLO, YOLO. And again, my eyes were drawn to this immediately when you see volume picking up on the up days, receding on the down days. It's a clear uptrend that's going to be going on for a while. The monthly looks terrific. And again, if I did the fundamental work and nothing showed up, and it was crickets, I'd say, okay, there's nothing going on here, or it's already over. But that's not the case. The cannabis world is going to be a lot of fun for years to come, in my opinion. New copper. Copper broke out, and I bought it later than I probably would have liked to. It didn't hit certain volume restrictions that I have in my discipline, but China is obviously rebounding from COVID very, very well. They're a big copper consumer, and electrical vehicles, which we'll talk about later, use a lot more copper than traditional vehicles. And I can read a chart, and this chart is going north. New highs on the monthly mean you have very little upside resistance, and we're going north. Other thoughts? Why invest in ETFs versus individual stocks by and large? My main reason is it diversifies when you have a small pool of money, and I just think that makes sense. Number two, if you get the group right, you're halfway home. 80% of the returns are dictated by getting the group right, and then the individual stock selection becomes secondary. And my other point is when we invested in individual companies, we would be buying hundreds of thousands of shares or millions of shares, and I would interview the CEO, the CFO, preferably separately, on their premises if I could. I would have this extensive questionnaire that I built up with Foster Friess and Ed Antoian and my own foibles and years of experience to make sure I covered just about everything. High and low analysts on the street, I'd talk to them, see why they were bullish or bearish. I'd read the 10Qs, the 10Ks, and I can't do that. It takes too much to do for small investments. So a thought I have is if you want to pick an individual stock, I would start with looking at the top 10 holdings inside the ETFs we discuss and see if there's something there that you really want to focus on. But again, do and share your own due diligence if you decide that's the way to go. Here's my take. Long-term trends are intact for Bitcoin, uranium, cannabis, gaming and esports, and now copper. Fan mail. Charlie S., big fan of the show. Love this guy. Come from New York City. Asked about other crypto. And I said, I don't know yet. Ethereum seems to be the number 2 to Bitcoin in terms of market cap and market acceptance. Again, I would point you to Pomp and James Altucher if you really want to get into the weeds. I think Bitcoin is enough to diversify and own a small piece of your portfolio, hedge against debasement, hedge against inflation and what have you. But stay tuned. I'm going to be obviously doing a lot more work on this, and my take is I'm exploring crypto outside of Bitcoin. Just don't have anything for you yet, but I wanted to be responsive. Podcast of the week, Business Casual. A couple of months ago, Kinsey Graham, I believe is her last name. I think I have that right. And was talking with, I forget the guest, but one of the gaming CEOs. And 40% of the world is going to be a gamer by 2023. That's 3 billion people contributing to a $159.3 billion market. I mean, this is for real, and a bit of a subtlety that I hadn't encountered, and I didn't include it in the show notes specifically, but gambling on gaming is going to be a thing as well. And that's in its infancy. So the interest that could compound here is going to be pretty substantial. And I don't know if that was subliminal or I read it, but the Compound Show is next with Downtown Josh Brown, who I like a great deal. And his title of this, I'll Invest After the Dust Settles. And at 3 minutes or so, he points out what we all know. The dust never settles. There's always something to worry about. There's always some concern. There's always headline risk. There's always election strife. You name it. And so just you got to have some investments. And you can time around the edges. But if you wait for everything to be perfect, it never shows up. Someday never comes. And so just throw that into the dustbin of history that the dust is ever going to settle. And at 40 minutes, he really, this struck for me for Bobby and Jack, my sons. Diversify your investments away from your job. And Bobby, you don't need another data center stock. QTS is plenty, given the amount you're going to have by the time you retire. And Jack, your income is tied to the stock market a lot as a wealth manager for UBS. So you ought to own a little more cash, a little more Bitcoin than other 22-year-olds. I just think that makes sense. That isn't being bearish. That's just being smart. And I pass that along to others if you're in a similar situation. Smarter Markets with Eric Townsend is the next podcast. This gets into the weeds a lot, but he had Robert Friedland on, billionaire commodity CEO, a mining CEO. And number one talks about blockchain enabling grades of copper, for example, based on how they are mined under ESG standards so that it can be verified. And he envisions a world where there are grades of copper, just like there are different grades of crude oil based on sulfur content. And I think that's going to be interesting to watch. You don't hear ESG and mining in the same sentence too often, so it caught my ear. Also, I was struck by the magnitude of electronic vehicles driving the demand for metals. And some I've never heard of, but here they are. Aluminum, scandium, silver, vanadium, copper, nickel, cobalt. And right after I did this, I printed out a number of ETFs that I don't think I had in my screens. I'm going to include these. But if you're a fan of Tesla, you ought to be a fan of the metals that go into the Teslas and their competitors that are right behind them, and watch for the bottlenecks that ensue with battery technology and supply issues with these metals if there's a timing issue with getting the metals out of the ground and into the cars. Something to watch. Guy Raz interviewed Tim Ferriss on the Tim Ferriss Show, so it was on his own show. Guy Raz is the host of How I Built This on PBS, and he has his podcast. It's a great show. I recommend both highly. And this is also for my sons. Tim is a very successful guy, very thoughtful, but he talked about how as he was selling, I want to say software services, but recording real time what works and what doesn't on each sales call. Maybe you already do this, and I also apply this to investing. I do it, but I'm kind of reinvigorated to do it more extensively than I have, is write down what works and what doesn't, have a notebook somewhere as a central repository. I wish I had done this more fervently, but better late than never. So just some good advice from Tim Ferriss, not a bad guy to listen to. Prof G podcast, this is Scott Galloway. He's a professor of marketing at NYU. He interviews Michael Saylor, the CEO of MicroStrategy, at 1447. It's about the best rationale and explanation of Bitcoin's benefits I've ever heard. He has put his money where his mouth is, and his company, he's invested $1 billion of the Treasury's cash into Bitcoin, and very public about it, been interviewed extensively. But this was, if you want to say, why in the world would I invest in Bitcoin, listen to that probably 10 minutes or so, and it'll get you a long way there, in my view. And I also like the Prof G podcast. At 9 minutes or so in the Mining Stock Daily podcast that's in the show notes, talking about uranium and the growing institutional interest. So there's the fundamentals, but then there's just the mechanics of the market. And you have a very small pool of investable assets that are tied to uranium, and you have the Bear Traps Report, great newsletter, Zero Hedge, great newsletter, making the case for uranium, and the institutional interest is coming in, and it's like an elephant coming into a bathtub. The water is going to be going everywhere. So I like uranium. I think I mentioned that. So here are my takes. I like commodities more than most growth managers. Some people kind of look down on their nose on commodities. I just want to make money. And part of that is it worked for me when I was managing mutual funds in the 90s. Energy, titanium really boosted performance a lot. I'm fascinated by the electrification of autos and other machines. And I'll make this point too. People say, "Oh, I don't understand Bitcoin. Digital currency, I can't touch it." And I would say to that, well, number one, the government can hit a button and print as much as they like and make the value of the dollar go down, and they have, and it's going to continue for a long time. And we carry around pictures of dead presidents. And if it wasn't a gold coin back in the old days, it didn't count. And we just decided to, lighten our wallets literally and print it on green paper in Dalton, Mass. So it isn't that far to have an independent repository of value based on computers all over the world where a central bank can't touch it. Bitcoin makes a lot more sense when you think about that. Reporters of the week. This is Jack Howe from Barron's, one of my favorites, talking about Tesla storming into the S&P 500. And that's already occurred, obviously, with not as much fanfare as I think people thought it would be. It's the sixth largest company in the world. It's bigger than Berkshire Hathaway. And I'm not saying that's right or wrong. I'm just saying, the valuation is extended and caveat emptor. Now, Adam Jonas at Morgan Stanley upgraded this to an overweight, suggests about 22% upside. Here's the thing that struck me. Only his bull case target, the core car business is 43% of the rationale. I hadn't thought about this before. Tesla can eventually make more profit per vehicle selling network services, insurance, other than selling the vehicles themselves. Tesla buyers can already pay for self-driving capability, unlock faster acceleration, upgrade infotainment systems, talk of a subscription service for battery charging. So if you're a Tesla investor, and I know there are a lot out there, that's part of the bull thesis, at least in this one case. And I recommend that you do your examination, see what you agree with, see what you don't. The Economist recently talked about Mexico becoming the third country to legalize cannabis. And Americans in 11 states can buy cannabis legally now. I thought that number was higher, but so be it. If Mexico, the demand for Mexican marijuana is going to go down if our expansion continues. President Biden is in support of decriminalization, though not legalization. Kind of a political nicety, it seems to me, but be that as it may. 68% of our citizens support full federal cannabis legalization. Past election, 5 states passed medical or recreational legalization referendums, even the conservative states, Montana, South Dakota. So again, it's all over now. Cannabis is growing, and I just think you should make money from it if you choose to. Barron's Bill Alpert talked about cannabis during the elections. Arizona, Montana, New Jersey, and South Dakota recently had some form of legalization. And here's the rationale. So who is next to New Jersey? New York, Connecticut, and Pennsylvania. New York and Connecticut at least have a horrible budget situation, and they're going to be looking out for revenue. And so I just think it's a matter of time before those dominoes drop. It's just like gambling occurred. You take it out of the dark and bring it into the light, and you tax it, and you have legitimacy and revenues. And everybody needs revenues right now. So I think it's a no-brainer. But here's my take. Cannabis is becoming mainstream. States need revenue. I think it's almost that simple. Almost that simple. Charts of the week. As you know, I go through 1,700 plus charts every month, and certainly at the end of the year, I do it with a bit more scrutiny. I go through them all. If they use leverage, I tend not to care, and if they're a bond, I tend not to care. But so, given all that, I look at everything so that I learn. Here's what I've come up with this past month. China. I urge you to check your biases at the door. I'm trying to. I don't like the Communist Party. I don't like the way they interact with their citizens and their businesses. But China looks bullish, and I haven't found anything that I've committed to yet. This is the Morgan Stanley China ETF. I just think that at some point I'd be surprised if I didn't come back to you and say, here's the China ETF that I think is the best to exploit. I pour some sugar on me, the old Def Leppard classic. I'm probably dating myself. The Tecurium Sugar Fund looks really interesting to me. I have not pulled the trigger, but you take a look at this, you're seeing the volume pick up on the up day, the moving average is starting to move up, relative strength starting to improve. And sugar has been in a big bear market. I didn't realize how much it's come down in price. And that looks like it's turning. So I'm monitoring this. If you have thoughts, I'd love to hear them. The Aberdeen Palladium ETF. I have not pulled the trigger on this as well, and I don't know how catalytic converters in gas-powered vehicles, they use a lot of palladium. I don't know how that translates into EVs, and I'll report back to you what I learn, and you please report to me what you encounter. But palladium looks like it's going north, and certainly gold and silver has gone north, so it makes a lot of sense that the complex is going up. This is fascinating to me. The Tecurium Agricultural Fund, it's a basket of sugar, corn, wheat, and soybeans in one ETF, which I think is kind of cool because I think all of those individual ones look bullish. Please note, watch the volume. This is very thin, trades about 1,000 shares a day, which I think is an opportunity if you don't have liquidity requirements, which I don't think most of us do. I think owning 100 shares of an ETF would be plenty. That's 10% of volume, and I'm fascinated by this. It looks really, really exciting to me. And then here's the last thing I came up with. So that's 1,700 charts for 4 bullish observations. Here's a bearish observation. Vaccines, be careful if you bought the vaccine stocks. I think it's buy the rumors, selling the news. This is a fund. This is the Pacer Bio Threat Strategy ETF. You see how it picked up from the depths of COVID, and Pfizer looks like it's making very little money from their vaccine. I don't know what Moderna's going to make, but be careful. Buying the rumor and selling the news is a real phenomenon, and we're going to see AstraZeneca and J&J coming up down the road. So it's great for humanity, but I don't think it's going to be great for investors. So be very careful. So here's my take from 1,700 charts. I detest communism, but I like China. Commodities are rising, and I think inflation's next. I know people are going to scoff at that because they say, the Fed can't create 2% inflation. But that's why I hate bonds, because every time I see money supply go up the way it has, interest rates historically have gone up 2.5 percentage points, 250 basis points, and bond prices go down. In the case of inflation, I don't know, even oil's up, but uranium, wheat, soybeans, corn, sugar, copper, everything's up. So it's going to show up someplace. I mean, I don't, unless I'm missing something. All I know is I can read charts. Fade the vaccine plays, and I sure as heck wouldn't buy them. And in fact, get ready for good Main Street news to be bad Wall Street news. I think next year, if we talk about reopenings and the COVID case and death numbers start coming down, you might start seeing bond prices go down, bond yields go up, and then all of a sudden we're going to be discounting these higher valuation stocks in a different way, and you could just see everything be the same, but the PEs come in, and it could be a tough year. I don't know that, but that's what I'm watching. Bonds, by the way, when we started the podcast, Mike, we were talking about 60 basis point bonds, and now bonds are at 93. So doesn't sound like much, but you lost money if you own bonds. So I'm going to start talking about newsletters in the next episode. All right, that's the show. Please subscribe to my Bakes Takes YouTube channel. Go to the YouTube channel and just hit the red subscribe button. And please, I want to get my subscribers up, and I'd really appreciate your help. Please share this with anybody you think I could assist. The audio is the same, but the charts that I reference are on the screen. I think it adds to the experience a lot. Please follow us on Twitter at BakesTakes_ and other social media. Please use your voice memo app. Tape your questions and email to bakes@bakestakespodcast.com, or write in if you'd prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Have a great week. This is Bakes. 2 sign-offs. Barstool Fund, Barstool Sports. I like Dave Portnoy. I think his heart's in the right place, and my son's turned me on to this. They've raised $16 million to give to businesses and certainly restaurants. Shout out to Flanagan's in Conshohocken to keep old family businesses alive. And he was on the Josh Brown Compound Show. A guy from Boston that shows up at the T station at 5 o'clock to sell a 4-page gambling rag, and then sells it for I don't know how many hundreds of millions of dollars to Penn National. It gives me faith in America, and I like it. And I like the fact that he's done more than any politician has to help small businesses. And I like it. Much needed levity. It's on Netflix right now. Kevin Hart, 0 F's given. Even though it's a podcast format, I'm going to keep this a family show. But it's very, very funny, and I recommend it highly. I'll see you next week. Take care now. Bye-bye. Thanks.